it happen. You know, it just takes the first person that starts selling, and then people start piling on.
So think, for example, if one Bloomberg starts reporting, for example, that China is no longer buying United States treasury notes or anything of that nature, or whatever, our bonds. That's kind of a wake-up call, like
or if they start dumping them. I mean, China has $1.5 trillion in total in the different ways of treasury bonds, and they're very much invested in keeping the value of those bonds up. I mean, if you got a pile of money in your pocket, you don't want it to be worth 50 cents on the dollar tomorrow. But if they reach a point where they feel that, we're better off getting what we can get today. The dollar may be dropping and dropping and dropping, and all of a sudden they say, it's time to bail out. And they start dumping them, and that causes the crash. And who knows? They might do it on purpose. Then they don't have to invade us. They can just destroy us economically. It's kind of like what we fought Japan in World War II. And we won, I think. But part of it is they wanted Hawaii. Well, they just bought it. I mean, almost everything in Hawaii is owned by Japanese. So, China can buy almost, there'll come a point when they can pretty much buy the United States.
So, well, do you have also anything other, as you can imagine, I was trying to get an idea of what kind of little little things along the way that you can look at and kind of think, this sort of thing, that sort of thing. And besides China dumping things, what other little things, what things would you notice?
I mean, when inflation picks up, when the price of gold jumps up, I mean, gold is, $900 and some an ounce right now. And if it it hits $2,000, I wouldn't be surprised in the next 3 to 5 years. I mean, those kinds of things mean people are losing confidence. I mean, right now, the whole world has fiat money. I mean, the euro's a piece of crap, just like the dollar, just like, the British pound or the fact is that it's all fiat money. Any central bank can print money. So there's no reason to trade dollars for yen or for Swiss francs or euros or anything. I mean, I thought that if any country on earth was going to support the value of their money, it'd be the Swiss franc. And then they went and devalued their money to keep up their exports. So when the Swiss won't even defend their money, it's time to have gold and silver and platinum and things that have some real value. Or iron, or oil. Real thing, aluminum, things that have value. Copper.
State Farm, you mentioned that it has some problems.
I don't think problems. They were very heavily invested in common stocks, so they took a big hit. But they have so much money that it's not a problem. They had 4 or 5 times as much surplus as they probably needed to begin with. So if they lose 20% of it, no big deal.
I thought the insurance commission regulates how much an insurance company.
That's a good theory. The state of Illinois Insurance Department, State Farm is domiciled in the state of Illinois. If State Farm says to the Illinois Insurance Department, we'd like, they say yes. State Farm is such a force in the state of Illinois that the insurance department will do nothing to upset them.
Coming back to at the beginning, you said something about the rates being regulated. Is that true? Let's go to car insurance. Car insurance rates are actually regulated?
Yes. Every rate has to be filed with the state insurance department and approved before they can charge that price. So when your rates go up 1 year, down the next, both of those had to be preceded by rate filing.
So this announcement yesterday in the news, the state farm was going to drop their rates 18% or something like that.
They made a filing with the state, and it may already be approved. I mean, if they're filing for a rate decrease, it's going to be approved. And nobody ever rejects those.
Does everybody go down 18% or does it?
No, it's just State Farm.
Okay, so each
company files their own rates.
Okay.
There is price competition. If there wasn't any price competition, they wouldn't lower their rates.
No, the libertarian principles say that the price fixing is going to lead to shortages or surpluses or whatever. How does that?
Well, this isn't really price fixing. It's price regulation. Because, I mean, there are companies that charge half what State Farm charges. And there are companies that charge a lot more than what State Farm charges. So they're competing. They're not competing solely on the basis of price. I mean, one of the things State Farm always promotes is we are the largest, safest insurance company out there, financially. And they probably are. Because the kind of insurance they write is very low risk, and they have so much surplus that there's no issue of them being able to pay it. So we don't have workers' comp used to be price fixed because it was a minimum rate clause, but the price was not going to generate a shortage because the minimum rate was high enough that almost anybody could make a profit. Now, if they set the minimum rate below where most people can make a profit, you have a shortage. And even if you have a shortage, they have a state workers' comp fund that writes everybody that private companies don't want to write. They have an assigned risk plan that writes automobile insurance for people that no private company wants to write. So you get it anyway. They have the fair plan for homeowners that no private company wants to write. If you live, up in the brush where you're going to have lots of fires, nobody wants to write those. So the fair plan writes it. And if they lose money, they assess all the private insurance companies. And then people insured by private companies get to help bail out people who live in fire-prone areas.
What about the fire?
The Oneida fire. What about it?
They spread some houses.
Right, and probably most of them are insured with the fair plan if they live in fire-prone areas. So we subsidize rich people's fire insurance. Absolutely.
I guess this kind of flood insurance where people keep building their houses back on floodplains and on low barrier islands off the coast of Texas and North Carolina and stuff like that. We get every time a big storm wipes them out, and they get the insurance to build it back up again.
And there's been proposals in Congress for at least 15 years to take that federal flood insurance program and extend it to cover hurricanes, earthquakes, tornadoes, all other natural disasters. And so far it hasn't happened. And you know who the best was? The Clinton administration was the best. They were against it. There are a lot of free market people in the Clinton administration, surprisingly. Because I got hired by the Clinton administration to ask embarrassing questions of executives from Allstate, State Farm, farmers, and other companies that wrote a lot of business in Florida and California, and Texas, and Louisiana. That was fun. I'm probably going to run for insurance commissioner, unless I run for governor. All right, I'm done.
Okay.